Okay, we're just about to get started. I see all of the participant numbers going up here, so I'll give it, yeah, just a few seconds and then we'll get into the material. Okay, great. So it looks like we have most people have been able to get added into the session so far. So today we're going to be talking about how to make the most of market correction. Very important topic, because it'll help you avoid losses in a bad market and show you how to get into the best stocks early in a new uptrend. Of course, my name is Jacob. I'm one of the premium product coaches here at MarketSurge and the host of today's webinar. As always, before we get started, I have to remind you that this webinar is for educational purposes only. So none of this presentation is investment advice. So please just take a quick moment to read this before we can really dive in. Okay, so let's go over the agenda. What are we going to be talking about today? So we're going to really start by discussing why we actually love corrections in the market. It's a bit of a subtle point, but it's important because corrections give us opportunities in the stock market. Then we're going to really talk about how one should behave and strategize during a market correction. I will then highlight what we are currently seeing in the stock market, right? There's been a lot going on out there, so we're going to talk about that. And I'm going to really tie it to some of the notable corrections that we've all seen in recent memory. And then I'll show you the ways to really use MarketSurge to help you find stock ideas while we're in a correction. And then finally, I'll open up for Q&A. We'll probably pull open the charts here and I'll take any questions that you all have. Okay, so let's talk about why we actually love corrections in the stock market. It's important to understand that corrections are really opportunities. It's natural to get disappointed during a correction. But if you have properly protected yourself by really reducing your exposure to equities, corrections are an opportunity to really just observe the market from the sidelines. When the market's weak and I don't have much exposure, I really like to just hone in and see how stocks are behaving. Asking myself, is that stock that I like really dropping precipitously, or is it holding up during a correction? I will also add that corrections are really just an excellent time to improve your investing. Personally, I like to just crack open books to learn more and really improve my knowledge of the market because we're all lifelong students and should always aim to really grow and learn as investors. And I've spoken to many of you. Yeah, a lot of you are doing the same thing during these times. It really is an opportunity. Go back, maybe read that book that you found extremely helpful to your investing a while ago, but you haven't read it in a while. I know somebody was reading all the Minervini books just last week, and it really is an opportunity, right? We're not out there buying too much, and to really remind ourselves of really what we're doing here. And it's always surprised me some of the ways maybe I drift away just a little bit from some really the kind of some of the more subtle tenets, and it's helpful to kind of relearn and revitalize what I'm doing here in the market. Now, corrections really, this is super important. Corrections enable you to identify the next potential leaders. So during a correction, you can really identify which stocks are resisting the downtrend the best. And these are frequently the leaders to look for when a new uptrend begins. And we're going to talk about some of the reports and screens that you can use during a correction to identify future leaders later on in this webinar. But one key thing to look for during a correction is for stocks that are resisting the downtrend. And the relative strength line, that blue line that you see on your stock chart, is an invaluable tool for doing this. So probably the key thing that I'm honing in on when we're in a correction, I'm looking at those very best stocks. I want to see that relative strength line trending up. It's a very subtle thing. When you're just looking, say, at the price bars, a stock can really seem unspectacular. But when you see that relative strength line trending up, it's giving you an important signal And that's one really important reason why we have it in MarketSurge is it can be really easy during a correction to miss signs of outperformance. And you'll see those subtle signs of outperformance by way of the relative strength line when stocks are really building the right side of their base, getting close to that follow through day, all that fun stuff. I'm really excited to talk about it. So I'm going to show you some examples, but do want to emphasize that point. Now, corrections always set up the next uptrend. So it's important to really adjust your mindset during a correction because corrections are actually a good thing. When a correction ends, a new uptrend begins. Corrections give us the opportunity to get into future leaders just as a new uptrend is starting. So right around that follow through day, we like to maybe at least just take a little bit of a position in at least one leading stock out there in the market, and then you'll really start to see those stocks build their stage one bases. So super early in their run. And that's why corrections are really an opportunity because we're getting those kind of stage one bases setting up, breaking out in the very best stocks. Really an opportunity to get in those huge winners early on in a big run. Of course, corrections really allow you to observe these types of stocks that are likely to be future leaders. So ask yourself as a correction develops, how is this stock really behaving during the correction? Is the stock staying above the 50-day moving average or the 200-day moving average? What is the stock's behavior while the market's correcting? Is that stock you really believe to be a leader staying strong in a weak market? If so, that's a really good sign. Of course, we all know to look for strong stocks when the market's in an uptrend, but it really is equally important to observe how leading stocks behave during bad markets. Okay, so what should you do when the market's in a correction? Of course, very important. Cut your losses to protect your capital. When we're in a correction, you have to protect yourself and cut your losses. If you're down on your positions, don't let them get too bad. If we're in an uptrend, sometimes you can get bailed out by making a mistake, just being in a strong market. But when the markets are in a correction, you have to protect yourself because the market's not there to to help you out and forgive you your flaws or maybe, not being super disciplined and selling when a stock goes down. That's how you can really get hurt, do really major damage to your portfolio. And it takes so much work and time and finding another big winner to get that money back. So we'll just remain disciplined, stick to our rules, and really avoid really taking any sort of major hit to our portfolio. Extremely important. In order to win the game, you have to stay in the game, and that means cutting your losses. Now, we want to let stocks and the market prove themselves again before getting back in. So, the best thing to do is to stay on the sidelines and let the stocks that you're watching and the markets prove themselves before you put your hard-earned money back to work. And of course, all of you, I would hope, know of my colleague Arnie. He does our monthly Stay in Step webinars, and of course, prominent member of the IBD Live team. And he always has great sayings. So I remember he always tells me one day doesn't make a trend. Really big thing why we like to look at the weekly chart, right? Any stock can go up 3% or down 3% in a single day, but we're really interested in the trend in the stock. And knowing that just one single day doesn't make a trend has been extremely useful to me in corrections, right? It's easy to get excited about a stock and think you're going to buy a stock just as it bounces off a low during a correction, but this is both very difficult and quite dangerous. And that's why we wait for the market to prove itself by having a follow through day. And we wait for a stock to really work its way higher, break out of a base, and hit a buy point. I know this is hard, but it's really all a tremendous opportunity for us. The base a leading stock builds as we're coming out of a correction will very likely be a first stage base. So we get the chance to really get into a great stock at the beginning of a potentially huge run. We've seen this multiple times. I remember seeing it like in that late 2022, early 2023. All of the best stocks that went on to be huge winners were showing all of the things that we're going to talk about, uptrending relative strength line, breaking out of stage one bases. Of course, we saw it in 2020. We're going to show one idea from that time, and you'll just see it over and over again. These follow through days and breakouts of the best stocks can kind of catch you at surprising times. It's some people say it's almost that moment of capitulation after there's been so much loss in the market, and that's really why we stay disciplined and really keep our eye on these leading stocks because the rewards are so huge coming out of a correction. Getting those stage one bases on companies that are changing the world is really a huge opportunity. Of course, we're all familiar with the phrase cash is king. So it's often safest to be on the sidelines during a market correction and then just observing what's going on. Pay close attention to which stocks are resisting the downtrend, building bases, and have a relative strength line that's near its 52-week highs. All of this will help you find stocks that are ready to take off when the market comes around. Now, one thing that can, a perspective that can really be helpful to us is to think that cash is a position. So if you think of cash as a position, you can hold while the market is correcting, and eventually there will be a better position for that cash. And then you can sell your cash and move into a better investment in the market. So, kind of just thinking of cash as a position will help you really keep the right frame of mind and then just avoid plunging into a bad market at the wrong time. Okay, so let's now talk a little bit about the current state of the market, and then we're going to go over some examples that we've seen from some previous corrections. So, as you all know from keeping an eye on the market, things have been wild. You could even say historic, right? I think people go back, years from now and really study what we've seen recently in the market. There's been huge sell-offs. And so we have a current exposure level of 0 to 20%. And it's interesting, right? Because we are in an attempted rally. I'll pull up some of the index charts that we have. I believe we're on day 7 of an attempted rally right now. No follow through day at this point. But while we're in this time, right, and really one of the key takeaways from this is that we really want to continue doing our research right now and looking for those leading stocks that are out there because we want to be ready when there's a follow through day. Now, if you're not already aware, not every follow through day results in a new strong uptrend, but every great uptrend has started with a follow through day. So if you don't know how to, identify what's a follow through day just by looking at the charts, I know that many of you have been with us 20, 30, so on years, and you can see it immediately. Others who are still newer to this, or maybe even been around for a moderate time, it's not always immediately apparent. So you're going to see it on the market snapshot. So the screenshot I have over here on the left-hand side is our market snapshot. Our markets team is doing all the heavy lifting on the back end. They're looking at the market, looking at all the data points we like to see, really following the IBD methodology, sticking to the rules that we follow for identifying these follow through days, and you'll see it posted here. Okay, you'll see it posted. We update it every day after the market closes. Now, as I mentioned, when we get a follow through day, we aren't plunging in. Rather, we're getting into leading stocks in a very incremental fashion. We want to be careful because the market kind of has a way of looking just good enough to get you in. And so that's why we really want to be incremental and really diligent and disciplined about it. And I just really can't emphasize enough how important it is to continually observe the market and look for these follow through days because a market can really start going up, make that new uptrend when you least expect it. And what we don't want to do is, of course, just plunge in at the wrong time, thinking that one day makes a trend, or very very painfully waiting too long, right? Staying away from the market for months and months and months after a follow through day happens, only to start to see all these great stocks that have already broken out and gone up, some 30, 40, 50%. Now they're at, stage 3 and all this and that. We want to get those stocks at stage 1. Okay. So here's the 2003 market, right? And the market was really awful at this time. We were working off the tech bubble right around here. And the last thing a lot of people were thinking about at this time was the stock market, right? The news was terrible. And you see the market's trying to rally and then it fails and work its way lower. And then it tries to rally, fails, and works its way lower again. And after the market's been beaten down so badly like that, it's natural to start thinking here, are we going to make another low again? However, if you're running your screens and are keeping really just a simple routine, continually observing the market, you'll start to see outperformers show up on your radar. For example, while the market was really down in 2003, eBay had already broken out and was moving higher, right? Let's just take a look at this relative strength line, right? So really, while the market was looking, quite depressing, making lower lows continually, eBay was, of course, a very hot stock at the time. And we were seeing that relative strength, right? A really key indicator in MarketSurge, in particular during corrections. I'm looking at it all the time whenever we're in a correction. And we just see that relative strength, all of that outperformance just showing up, proving that this stock was a leader in the market. And so, it was just an opportunity for us to really find these next leaders and really just identify them on the chart in a very easy, simple fashion. Now, on March 17th, 2003, we had a follow through day. And at this point, stocks had really just started resisting the downtrend and moving higher. And you can even see the high volume that just started showing up and was really coming in on that follow through day. You can see the preponderance of blue bars that start popping up with that high volume. And this is why we read charts. Charts show us supply and demand in the market. And we can really see that institutional accumulation going on, shown by the market really working its way higher in a pretty strong fashion there, with some really high volume accompanying it. In fact, right at that time, right at the follow through day, we saw a future leader, NVR, had resisted the downtrend. We got a nice, strong relative strength line working its way higher, and it was approaching its buy zone. And the stock more than doubled over the coming 2 years thereafter. Now, of course, we all remember the massive market crash in 2008. And there weren't many people out there who thought the market was really in for a huge and sustained uptrend anytime soon when all of that was going on. But in March of 2009, here at the bottom, the very last bar, we had a follow through day. And one stock that was breaking out right at that time, right on that follow through day, was Baidu. And the first thing that you'll notice about Baidu is that it was becoming more and more of a leader based on the uptrend that you see in the relative strength line. In a point that is really easy to miss, but there was divergence between Baidu's performance and the market. And while the market was making lower lows, Baidu started making higher lows, right? Because we had a low here all the way back in December. But by March, it was making higher lows from there. And then we saw the stock move above its 50-day, right? Kind of one of those alternative entries that we kind of look for. That would have been tough, right? There were people out there doing it clearly, but we also got a breakout later on in that run. And even here, right? So even if we're being prudent, being careful about getting back into the market, maybe we took a kind of small position somewhere along the way, but even if we weren't, and we just got in here at this stage 1 base, right? So right where we want to be, the stock still went up 5-for-1 from this base. So even if we were very patient, it took us just a little bit of time, we had a huge opportunity here to get into a stock that went up in a really major run. Another stock chart we'll take a look at, right? Kind of like Baidu, Apple was hitting a 52-week high on its relative strength line right around the time that we had the follow through day. And we also see Apple starting to make um, higher highs and higher lows as all of this, right as the follow through day, right? So this was right on the follow through day here. We had a low, we get a high, and then we get a higher low than the previous one that we had recently seen. The relative strength line trending up, and the stock had worked its way back above the 50-day. Now, of course, for Apple, right, the rest is history. Huge run, going up 6-for-1, right, just over the next few years. Okay, so finally, another example in very recent memory, one that we all experienced was the market crash in 2020, a very sharp and short sell-off. Another one that will be studied for years and years to come. We had a follow-through day on April 2nd of 2020, shown here that final price bar was our follow-through day. Now, at this exact time, we saw stocks like Nvidia showing early signs of leadership. So we see that relative strength line really just start to dart higher as we're really building the right side of a lot of bases in the market, as the market was really approaching that follow through day. We already saw Nvidia really start to outperform, right? These are the big institutional investors really coming in, buying it. They want in on the best quality stocks that are out there in the market, and stock like Nvidia really starts to work its way higher. It's just above the 50-day at this point, but really the key thing here is that relative strength, right? Really the key technical indicator that we want to look for when the market is potentially coming out of a correction. Okay, so let's talk about some of the best ways to look for ideas when we're in a correction. And we want to find the stocks that are really shaping up to be these types of future market leaders. Here's a screen that my manager, Scott St. Clair, created years ago. And it's really pretty simple. In this screen, we're looking for stocks with an EPS rating of at least 80, right? We like to see good earnings on the best stocks. We also want to see a fair share price, right? We're not looking for penny stocks here. We're looking for good quality. So at least $20 per share. And then we also want to see some sign of liquidity. So we've entered in a minimum of at least 400,000 shares, daily trading volume. Of course, in MarketSurge, you can customize any of these to your own liking. So if you aren't so worried about liquidity, meaning at least 400,000, you could drop it down to 200,000 instead. And that's really a great thing about the stock screener, right? We can maybe make the EPS rating a little bit higher or bring that current price down to at least $15, what have you. But really the key idea here is we're looking for really the best quality stocks that have at least some minimal amount of liquidity. And importantly, that very last one, right? I've talked about it a lot so far, but that RS line hitting a new high, right? So one thing that we can enter in to the stock screener is that the relative strength line should be at a new high. So we're getting automatically those stocks that have shown signs of leadership during a correction. Those stocks that the big institutional investors don't want to sell, right? They'll sell some of their weaker positions, get out of those. Those ones really tank and crash down. But there's some really great quality stocks out there that are all of a sudden being bought up as really kind of the picture changes. We get an attempted rally and are really going to outperform. So this is going to show us some of those higher quality stocks that are doing that. Now, one other kind of edit or tweak to this, if you would like, is there's also parameter in here, RS line within 5% of new high. So if you want to be a little bit more open, kind of expand out the universe a little bit, right? We have 14 stocks here, pretty easy to look at, but we can also get some more ideas. Maybe it's not quite at that 52-week high. There is a way to get it within at least 5% of new high. And if anybody wants to see that, we can, of course, go over that in the Q&A. I can pull that up. Okay, another screen to use during a correction. And the key idea with this screen is that it's going to show you stocks that are demonstrating strength in the face of a weak market, right? Really the key theme of what we're looking for during a correction. And so this stock will also give you a pretty short list of ideas, and it won't really take much time to look at, right? We had 14 stocks on the last screen, 12 on this one. Not too difficult to look at on a Tuesday night after work, right? Really just going to show us those stocks holding up of really high quality. And a kind of key distinction with this screen here is that we're getting price percent change and volume included. So we're getting a stock that was at least up 0.5% today, and we're getting some good volume coming in. So especially during an attempted rally, right, where stocks are starting to work their way higher, we're looking for the highest quality out there. We could get a follow through day. We're seeing things that are kind of getting that preponderance of high volume bars as the stock is working its way higher. And that's one of the key things we want to look for, right? That goes along with our relative strength we want to see. So another good one, especially for when we're really kind of potentially really getting into a new rally, new move higher, remains to be seen, right? We're not in the prediction business, but this is something that we can really use to build up our watch list in preparation for a potential new strong rally follow through day. Okay, so putting it all into practice, you want to study previous leaders and their behavior, right? We did some of that here looking at previous corrections. Very informative stuff. And that's going to really train your mind to really pick up on the subtle signals that we've talked about, such as divergence from the market, higher lows, the RS line hitting a 52-week high. Also, it's a good time to build out your screens, right? I shared a couple of ideas with you here. Really key things to look for: that relative strength line at or near a 52-week high, right? I've said it a bunch of times here. Very, very important. And then also the daily percentage change. That was one that we saw there on that second screen that I pointed out. So maybe try using some of those screens or build your own that will really help you find the future leaders in the market. It really does not need to take too long. And if you run these screens every couple of days just to see what's coming up and get familiar with some of the stocks that are showing up. Again, it doesn't need to be the world's most advanced research and screening, but just at least staying in touch, because what would feel be a very lousy feeling is to get a follow through day, and then you see the headline, there's a follow through day, but not even knowing what the best stocks are out there, right? You don't know which stocks have been resisting the downtrend, which stocks are outperforming, which stocks are, changing their industry altogether. So it's really important to be prepared when these kinds of things happen. And even just a simple screen looking for those signs of outperformance will do a lot for you. It's okay to take a little bit of time off, right? Where I'm not telling you to stay glued to your computer and just watch a correction 24/7, but you don't want to drift too far away, right? It's understandable to take a break, but you really don't want to, miss follow through day, huge breakouts, early stage one bases, because you just completely walked away and did not see what was leading out there in the market. Okay, so now I will go over to any questions that we have. I do see one in there already, and we will pull up the charts. Take a look at the current charts here. Let's pull the charts up. All right, so here we are. Okay, so you should be able to see my charts fine. I have the preview showing that it's up. If there's any issue, just drop that into the chat or the Q&A there. So, as I mentioned earlier, an attempted rally, right? We're not in the prediction business, not necessarily calling an imminent follow through day here, but we did have, the first blue bar down here, and we are now on day 7. For volume, a little bit low, right? We're at -5%. expected for the day. So still relatively low volume on the day, but we are at an attempted rally. So it is something where we don't know for sure what's going to happen out there, but it is just important to really employ a lot of the things we've talked about and really staying prepared and keeping our eye on the market and see the best stocks out there. Okay, yeah. So can we explain a follow through day with more examples? Yeah, because it is a little bit tricky, right? And sometimes I'll even go back and look at some of the rules to make sure I'm seeing it right, right? Because I do look for signs that we might be having a follow through day. Really, the key thing is that they usually happen on day 4 or later. So we had day 1 down here, right? That first blue bar, right? Where it really bounced off the lows, had a very sharp low there, right? Wild volatility in the market at this time, right? And so we had our first day here that followed through day will very typically happen at least day 4, right? So this was day 1 down here, this blue bar. You'll frequently see on day 4, and then on the follow through day, the exact price percentage change has kind of changed a little bit over the years, but the kind of the general number that you'll hear is up at least 1.2% on the day. And critically, the volume has to be higher than the previous day. Okay, so those are really the things we want to look for. But again, if this is still kind of new to you, read How to Make Money in Stocks by William O'Neill and pay attention to that homepage, right? I showed you that market snapshot earlier. That's going to have it posted on there, right? Really important stuff for us. That follow through day, definitely something that we look for. You'll see it mentioned in all of our articles on Investors Business Daily if you have that. And you'll see it posted on the market snapshot after the market closes. So definitely important thing to look for. Okay. So another one, this is a common question. So definitely happy to take this. Do individual stocks have follow through days? So from like technically speaking, the answer's no. We're not say using the term follow through day for just an individual security, but on a follow through day, right? So the market is, of course, like a composite of all of these other stocks that are out there on the market. And really the best stocks, right? The leader, something we're looking for is that those stocks are outperforming, right? And they're doing even better than the market. So on a follow through day, you're likely to see these really nice moves in leading stocks in these individual companies that are out there. So it even though we don't technically say follow through day for any individual security, it is something that will certainly have an important impact on the best types of stocks that we really want to look for. How do we determine when a position has gotten too bad? So a couple of ways to really slice that. I mean, of course, one thing, right? An incredibly important rule, right? Maybe if a person is going to know one rule and always follow it is, if, let's say we just bought a position and the market starts to sell off, we keep our losses to a maximum of 5 to 8%, right? We do not want to lose more than that. Very, very important rule that we always want to follow. Corrections can really hurt you if you don't follow that rule, right? Again, we're not in the prediction business. We don't know what the market's going to do. Maybe we got into an incredible stock, but the market does something like we've seen recently, where even great stocks can go down. And we don't want to find out by holding on to a new stock that we just got a position in that is really going to go down in a major way, right? And it only gets harder and harder to sell from there. So that's definitely one way that a stock has gotten too bad. Another thing, right? Let's say we're ahead on a position and we have a really nice, profit on a stock, right? We can at that point be a little bit more, we can give it a little bit more room. And, if we've doubled our money on a stock, maybe a 10% pullback is going to feel less concerning and kind of, we still have this huge profit ahead of us. Some of the things that we'll look for, right, is, what's the stock doing near its key moving averages, right? So we have the 50-day, which is the red line there. We have the 200-day. So when we're looking at an individual stock, is it finding support at a key moving average, right? That would be a good thing. If the market's dipping, let's say a little bit, maybe not something so dramatic, it's dipping a little bit. Is it going below one of these key moving averages on high volume, right? That's one of our sell signals. And so something that we definitely want to look for. So when we say a stock has gotten too bad, I know I've heard a lot of the good folks on IBD Live say, nothing good happens under the 200-day moving average, right? So that's one way that we might want to think about it is, really we always want to have a sell plan for whatever stock we're in, whether we bought it yesterday or, 5 years ago. We always want to have at least a plan and in knowing at what point would we sell this stock. Okay. So how do we identify downward trends? And so really a key thing here that we'll use is called distribution days. And I will show you, we won't see it right now because we are in a correction, but on that snapshot, there's a line here for distribution days. And right now it's blank because we're in a correction, so we aren't counting distribution days. But when we're in an uptrend, you're going to see a distribution day count up whenever there's a distribution day. And a distribution day is a sign. It's a term that we use for signs of big institutional selling, right? So weakness out there in the market. And when we start to get too many of those, we're seeing signs of a weaker market and a downward trend in the market. So you can, of course, take a look at these, right? And you'll see it on all the index charts, but we're also just going to post that here, right? And the higher the count gets, kind of the more risk we're seeing out there in the market. So that's really the key way that we're looking for those downward trends and really codifying it into our research routine. Okay. So excellent, excellent questions. If you want to follow up with me, I'm not hard to find. I'm one of the coaches here. I'll be on the phones in about 5 minutes, and you can always reach out to me. Again, my name is Jacob. I'll be happy to talk. And I really appreciate all of you, your time, your attention. Excellent questions. I hope this was helpful to you in making the most of a correction. All right, everybody, take care. Thank you so much.